Welcome to Unfinished Business. I'm your host, Kimberly Griggs, and today I am joined by Michael Frank, who is the co-founder of the Gilder and a seasoned entrepreneur with 35 years of experience across multiple industries, including day trading, venture capital, and technology. Michael has built and sold companies, sat on numerous boards and advisory committees, and now he focuses his time in mentorship and helping other tech startups and entrepreneurs grow and scale their businesses. So in this episode, we are going to discuss what the trading floor taught him about his own business, how his journey there eventually led him to building, scaling, and exiting his own company, and as well as what is now is still left unwritten in his own entrepreneurial journey. So, Michael, once again, thank you for being here. And I'm so ready to dive into the whole story of how you went from day trading to, eventually taking that knowledge and applying it to building your own business. So can you share with us a little bit about your background?
Sure, a pleasure to be here. I was a kid growing up in Far Rockaway, Queens, and I thought I'd be going into the family business. A rude awakening, the family business was no longer there. I was a bit of a wild young man. My parents had been divorced. My dad worked, 70 hours a week, and there's not a lot of parenting going on around the house. So I went up to Northeastern, thought I'd be a pharmacist, and I enrolled in a 5-year program. Boston, Massachusetts, great town, lots of action, lots of young people. I quickly learned that year that I was not prepared. I wasn't ready to be prepared. I wasn't mature enough to be prepared. And I decided to switch majors after 1 year, and I went to Fairleigh Dickinson for business. I went to that TNET campus where my brother was there finishing his degree. He had gone a 2-year and then 2 more there. And he had met his wife to be, and the father-in-law to be sort of suggested that he get a job on the stock market as a market maker. And I didn't even know what that was. He didn't even know what that was. I don't think a lot of people knew what that was. And he went down late 70s to the American Stock Exchange floor. And that first year he made, I don't know, 80 or $90,000. And my dad had worked, 20 plus years making 42.5 and had a Cadillac, and we thought that was great, and it sort of was great, right, growing up. But I became aware that there was more to life than just sort of retail. So I started my senior year while he was on the floor. They would drive in every morning at literally 6 o'clock in the morning, and I got to hop in the car. Being a junior or senior in college at 6 in the morning is something you typically don't see from the morning side. You might see it from the other side where you're up that late.
Yeah, going to bed.
It was freaking brutal. And he would never, it was a convertible, Caprice Classic convertible. And he never put the top up, even like sort of, unless it was pouring rain. So going through the Holland or Lincoln tunnel with no air conditioning, no ventilation, sucking down the bus fumes was brutalizing. You had to wear like a suit jacket. So I used to put my head down like into the wheel well to try and get fresh air. But I learned that. And after graduating, I went down to the Philadelphia Stock Exchange, cobbled together some money, borrowed some money, went down there and started trading down there as a market maker. A market maker stands in the crowd of particular equity options and adds additional liquidity. And maybe even if I was even a little more mature then, I would have done a lot better. But you're young, you're down in Philly, you moved down from Jersey, there's a lot going on, cheesesteaks and girls and pretzels and ices, and I'm sort of being a little silly about it, but a lot more going on. And from there, I built out a trading career.
Yeah. So how in those early phases, how did you get from learning the skills and on the trade floor to actually building and growing, a company and moving into that space? Like talk to me a little bit about the transition period there.
When you're on a trading floor, when you're running your own sort of little business, and at that point I called myself Frank Company, you're responsible for yourself. You got to show up on time, you got to be there, you got to understand what's going on. There's two parts of trading. There's sort of the math or the understanding of trading and the risk and all that kind of stuff, but there's also like the execution. So just because you understand all the math and everything, can you get trades done? Can you buy? Can you sell? Can you deal with the brokers? You're in a big crowd. He walks in, they got a big order. Everyone is vying for the order. So the logistics of trading are just as hard as the math of trading or understanding the risk and things like that. So we quickly learned to be much more aggressive, be loud, yell from the stomach instead of the throat. bumping and stuff, doing favors for brokers when they have an error, taking over an error, and then having them sort of look at you when they come into the crowd, and just running a business. So when you're trading and order flow comes in, it's typically one-sided. So whether they're buying calls or selling puts or vice versa, you have to hedge with a stock typically, or that stock typically, and you have risk. So you're making markets, you got to go hedge, the stock is moving, and you quickly learn how much risk you want to take, how much risk you're willing to, sort of look at, or how much risk you want overnight. Do you want risk overnight? So you're running like a small business, and the idea obviously is to make money, but many times in trades, you're not making money. You get what I'll call run over. Like they
Yeah.
come in to buy these calls and you sell some at 6 and now they're buying them at 7, they're buying them at 8, and you go to buy the stock and the stock's gone because other people got it quickly. And now you're starting to lose money and they're coming to buy more. So do you want to sell any, or do you want to just lock in your loss and buy the stock? Or do you want to sell more and sort of average up or average down? So you learn that almost every day is sort of a new day if you go home relatively flat. And as a market maker, like some people go home completely flat, but you could go home hedged, where if the stock gaps one way or another in the morning, maybe you're not at risk depending on what your math was or what your gamma is or your positions are there. So you learn to run a business, and you learn that not every day is a winning day, not every trade is a winning trade. But the beauty of that is that you learn that. Like, so you can come in the next day and go, let's go. Like, I'm ready to go again. Like, I got beat up yesterday, but today I'm going to win. Today I'm going to be quicker. Today I'm going to, and then you start sort of eventually using more technology. At that point in time, we were laying off stock through a broker, so you go to the phone quickly, and he was on another booth, and maybe you yell over, "Go buy me 5,000 shares. Go sell me 5,000 shares." Maybe you give a limit, maybe you don't, depending on what stock it is. And then eventually, more technology comes in. In the beginning, we were using trading sheets that I printed out and would hold. And as the stock was moving up, I flipping the sheets over to see what values were. Options are super easy, but also super complicated at the same time, because obviously stocks are moving. And then based on supply demand, the main component of pricing an option is volatility. It goes up, all the prices change. And that's the major component. It's time to expiration, and there's interest rate risk and other things. So during the day, for instance, let's pretend Philip Morris, you're trading Philip Morris, and the company announces that, or someone announces that the lawsuit is going to be announced whether they want or not this coming Friday. Today is Tuesday. Well, those option prices to buy and sell, all the option prices are going to move up dramatically. Why? Because they know there's something coming that's going to move the stock, some large lawsuit. The stock could move 10, 20, 30%. Who knows what could happen? So options are sort of like insurance contracts. And when the weather's nice and there's no hurricanes, nobody wants them. But when a hurricane's about to come in, everybody goes, I need insurance.
Yeah.
So, part of what you're trading is not just direction or trying to stay neutral, but volatility. And then as they buy more and more options and you sell more and more options, you become short gamma. So as the stock goes up, you get shorter, and the stock goes down, you get longer, which is not a great thing if it goes up a lot or down a lot. So you sort of learn how to run a business, right? And how to trade, and how to, there's other sides to it. There's your brokerage bills, things like that. So you start going over them. You're doing layoff and things. And I think it just teaches you, like, no matter what happens, you just got to wake up the next day, get in there. And there's days I used to go in, like, knowing the day before, like, you didn't want to come in. You're almost crying, like you got beat up so bad. And it was like I'll call it a hot order, or I'll call it an inside trading order. Like, it's very clear, and I think it still goes on, that people know more than you. And as a market maker, that's okay if they do it. Obviously, you just see it. Like, they'll pay anything for options. They just keep coming back to buy them, and volatility is going up. Something's coming, some announcement, some merger, something. The people who do it stealth wise, where instead of buying calls, they come in and buy puts, but they're buying stock at the same time. If you could figure that out, buying puts and stock is the same as buying a call. So when they buy puts, you have to sell stock, and you're out there selling it, and you realize you're selling it to them because the stock's not going down. You quickly realize they're buying synthetic calls, and then you try and position yourself appropriately. So if they ring the insider bell or the knowledge bell really loud, it's a good thing, because then you sort of, even though you're hedging, you sort of overhedge, and you have a similar bet. And then lo and behold, a week, 2 weeks, or maybe the next day, or maybe an hour later, something comes out and you go, oh my God, they were just,
That's what it
geniuses.
was.
They were geniuses. Yeah.
So it sounds like, I mean, obviously it's very competitive, highly competitive. So how did you go about, attracting, because you were working with individuals, correct? Buying for
No, no.
individuals or
So
small companies?
on the trading floor, like I ended up on the Amex for the next 20 years before I sold the company to Knight, a public company, and I stood a long time in Intel, which was, everyone knows Intel Inside. Maybe they don't know it anymore. NVIDIA is big in the news for the GPUs, but they had the CPUs, the Pentium, and all that stuff. It was a big crowd, so there was probably as much as 80 or 100 people in that one crowd trading only Intel options. So there was, well, for instance, right now it's June, so there will be like July and then September and December options. Then there'll be January 2026 options and 2027 options. And the crowd is spread out front month that way, back months that way. And I stood sort of trading the options that was 6 months to 2 years out, not in the front month. The front month, the spreads were tighter and stuff like that. But I was a market maker in that particular case. We were also specialists, and I'll explain that later. But as a market maker, I stood in the crowd. There was sort of I'll call it a cattle chute in front of you where the brokers came in and they would speak to the specialists, and the specialists would do some percentage, and then they'd turn around and everybody else would do the other percentage depending on how quickly you might buy or sell them. So it's an auction market. For instance, I'll make something up. They come in and it's six bid at 6.5 offer, and they want to buy dollars and 50 cents, and the specialist does some amount, and they turn to the crowd and people are vying for that, whoever was on the offer, and it's divided up typically amongst our people. Or sometimes it's, who the broker knows and helped them out in an error, or he wants to get in and out of there and he doesn't need, if he's doing 100, he doesn't need 10 tens. He just takes, 4 25s or something like that. Like he wants to get out of there. So that broker could be a Merrill Lynch broker working for Merrill Lynch. It could be a $2 broker doing Merrill Lynch layoff. Morgan Stanley, Goldman, everybody either had a broker or used a $2 broker to execute the bigger orders. The electronic orders, the smaller ones, the tens and belows came into the specialist, and they would pair them with other orders or announce them to the crowd trying to do better. The whole point of it is with a market making and specialist crowd, 6 to 1/2, maybe people are buying at 6 1/8 or 6 1/4, or maybe they're selling at 6 1/4 and 6 3/8, trying to do better for the customer. So the broker's always trying to do better, not sell them on the bid, not buy them on the offer if he can. And that's the auction market. So it's first come, first serves. If the market's 6 to 1/2 and he says 6 1/4 for 100, and everyone else says, add a half, and you say sold, it's your whole trade. And you've just sold them at 6 1/4, and then you have to go hedge and do whatever you're going to do. So depending on where you are in your position, what you think volatility is, and what time of the week it is, you might be a seller where other people aren't. You might be a buyer where other people aren't, depending on, how you're looking at risk and volatility and execution. And if you're a bigger trading firm like we were, we're also watching what's going on in 50 or 100 other crowds. So you start to see order flow in particular industries, semiconductors and stuff like that, and you see what they're doing. So you sort of know they're going to probably coming into Intel to do something similar, and
Yeah,
you can adjust accordingly, or you can start doing hedges, not with the particular stock, but with other stocks or other indexes and things like that. It becomes more sophisticated.
I see. So how did you transfer your knowledge and expertise to other people that you employed to as you were building and growing Gateway Partners?
So if you are a firm building a trading firm, you would like to be on every bid and offer in the world, theoretically, right? Because you get to buy in the bid and sell in the offer and the hedge. And the bid ask back then could be a half a dollar or a dollar wide, depending what it is. So if you had it worth $6.25 and you got to buy at $6 and you got to buy 100 of them, theoretically that's $2,500 worth of edge if you can hedge it and then lay off some other options at a similar volatility. So you quickly realize that if we can train people, and we hired mainly out of the Philadelphia office. It was our biggest office, and that we had the most specialist books there. We were also specialists as the primary market maker. And we hired out of UPenn, typically men, because they were bigger and stronger, and you need to be tall in the crowd to be seen. Being 5 foot in the crowd, no good. So you have to get the platform shoes. And we hired athletes also because it can be, the crowd really gets crazy. It could be physical and maybe some elbows and pushing and shoving, because you're
Wild.
trying to get the trades, right? Like this,
Yeah.
the guy's sort of like got his wallet open with $10,000. Who could get to it first, kind of thing. At least that's in the back of your mind. So we started hiring traders hiring people out of UPenn. We put them through a whole math course for 3 months, how we trade different stuff. Then we put them on a seat. We'd go rent a seat. A seat could rent anywhere from 2,000 to 20,000 a month. And then we put them into crowds and we'd monitor them. Eventually, we built our own software and had, instead of pieces of paper, we had, they were Fujitsu, I guess I'll call them iPads, but before iPad was even invented, and we'd hot sync them, and we'd have the clerks run out of battery every hour and a half because that's how quickly they ran through them,
Wow.
and they were in the clouds. But you can adjust volatilities on the fly, so shit starts happening, and you look at all your, excuse my French, look at all your valuations and nothing is lining up. You have to move your vol up, and if you move your vol up, that changes the price of things. It also changes your risk and things like that. But being able to adjust on the fly is important, and vice versa. Like, on a Thursday afternoon or a Friday, even though the valuations say one thing, we know that options decay. And Friday afternoon, it gets quiet. And then you have all of Friday, all of Saturday, all of Sunday. And when you walk in Monday, that option, we had it worth 6.25. On Monday, when you walk in, maybe it's only worth 5.75. So you start skewing your pricing. You don't want to buy as many options on a Thursday or Friday because you're going to get stuck with them over the weekend and there's no leverage to them. The whole point of, if you own options is that you have gamma. So as the stock goes up, you are getting long, and the stock goes down, you're getting short, or vice versa, depending if you're selling options. And you have to decide where you sort of want to be. Most people try and stay neutral. There are many firms that all they do is sell options and hope that they can absorb the risk as the stock goes up and be able to buy or do other things and go down. And in general, it works pretty well because most options go to zero. Option is the right to buy or sell a stock up to a given price at the given time. And as you get closer and closer to expiration, they decay at a much, much faster rate.
Sure.
You sort of don't want to it's sort of like owning a bunch of vegetables and in your refrigerator, and after like a certain amount of time, you're just not going to eat them. They're
There's
sort
a
of going
shelf
to go
life.
bad. You're going to have to throw them out. Well, the options just sort of go to zero. Their value becomes zero because there's no leverage left in them.
So I want to shift a little bit about, because this is kind of a good segue for what you were saying about, disruption and technology. What was the inflection point? So you have this company, you've grown and scaled it. What changed in the business that made you start, thinking about the business differently or thinking about, exiting at some point?
We were doing great. We were a specialist on the Philex and the Amex and almost 100 products. We were market makers in, I don't know, we probably had 300 or 400 positions. We built our own software. We had a full-time risk manager who just sat there every second, didn't even leave to go to the bathroom, or literally ran and back. We were watching risk on an individual level, on a group level. In 2000, I made more money than a kid from Queens could ever imagine. Everything was humming. 2001, I started losing more money than a kid from Queens could ever imagine. The business had changed dramatically. There was, first of all, it was payment for order flow. So people started paying Merrill Lynch's and the Morgans to bring the order flow to their exchange. So as a specialist, I had $50,000 or $100,000 payment for order flow bills every month. And I'm not even getting the bulk of the order, but I'm trying to get it there. So that's one thing, but we're still doing well. The next thing was we went from fractions. So we went from quarters, halves, quarters, eighths, and sixteenths to nickels. So there are 16 sixteenths to a dollar. Now there are 20 nickels. So there's more fractions, which means more people can step in front of you, or they're trying to do different things. But that's still fine. The real killer was multi-listing. So Intel was only on the American Stock Exchange. And that meant all the order flow came there, and that meant it's our proprietary kind of product. Someone sued, the court said, hey, Intel could be anywhere. So Intel options appeared overnight on the P Coast, on the CBOE, in Philadelphia also where we were, and even on one of the electronic exchanges. And there was no intermarket linkage at that point in time. So meaning you couldn't, as a computer, get to them quickly. So when a broker would walk in, and we're using Intel again, walk into the crowd and he says, how are these? And you say 6 to a half. And he says, oh, they're offered at 6 away, meaning someone's willing to sell them at 6 when our whole crowd wants to buy them at 6. And he'd say to you, you better sell them to me or I'll never give you another order. I can't go back to the customer and say they're offered at 6 and you can buy them at 6.5 when he sees they're at 6. And legitimately, it sounds good, right? Like he can't go back. So you end up selling at 6. So you're locking in a loss. Like, remember, we think they're worth 6.25, right? So you sell them 100, you've just locked in $2,500 trying to sell the other 900 to him at whatever price. And then you would use a $2 broker and you say, this one was Lenny. I go, yeah, Lenny, go buy those at 6. Buy as many as you can, right? And of course, he'd go out there, he'd pick up the phone, he'd call the SIBO. The SIBO would write the order up. The broker would run out to the SIBO, to that crowd, and that crowd would go, oh, we're not there. And they changed their quote to 6.5. So it took a while, forever, as far as I'm concerned, to try and weed through the people that had quotes up there that weren't willing to honor them, or maybe they're willing to honor them only to the real legitimate customer, like the customer, and not us, right? So I understand what they're doing. They're trying to fish for the order. They're the best offer, and they're hoping that that order comes to them, and then they could sell some at 6 and sell the rest at 7 or something like that. But it created pandemonium. So I'm losing money on order flow. I'm losing money on multi-listing. It became apparent to me that the rules and regs, so I'll make an analogy. We went from being the casino where there's always edge and the customer's probably going to lose unless he's super smart, to the customer. So now we have sort of negative edge. It became apparent to me that our probability of making real money again was very low until they had intermarket linkage. That was going to take a long time. Most of the bigger firms, in this particular case, Knight, had all this order flow, and they wanted to be a specialist in every product they had. So there was, I'll make up a number, maybe there's 2,000 specialist books, 2,000 names that they had order flow in. And so they started trying to buy those books to have all 2,000, whether there's 200 on the Philex, they had these 200 names there, 200 on the Amex, so they could send the order flow to themselves to trade on the other side of it. They came to me to buy my specialist books, and at that point in time, I thought there was negative probability in these. I didn't want to be a specialist being forced to make a market, much rather be a market maker where I could pick and sort of choose. And if the shit hits the fan as a market maker, you can go to the bathroom or step out of the crowd or not raise your hand as quick. As a specialist, you're the last resort, so you're forced to sort of make markets in size. So we ended up negotiating a sale of the company to them, and that was right before, nor did I know, obviously 9/11 comes. And then we never consummated, and then 9/11 happened, and that messed up the whole trade, the trade of selling the company.
So what was the result? How did you move through it? I mean, obviously that's it sounds like one of the hardest seasons to navigate in your career, but how did you end up moving out of it?
Who knew they'd fly 2 jets into the World
Yeah,
Trade
right.
Towers?
I mean,
I was there for that, and I won't go into the details and the things I saw, but if you want, if you go on my LinkedIn profile back in September on the 20-something anniversary, I wrote a pretty detailed LinkedIn post about what went on. But I went out there, figured out what was going on, and managed to get my people off the exchange floor and off the island of Manhattan before the towers fell, which was a huge plus. The Amex was, I don't know, just blissfully saying that we're still staying open or something. The whole thing is just insane. We came back, we reopened the Amex, I don't remember, 2 or 3 weeks later. It was brutal having to walk past the pit every day and the smells and stuff like that. And they came back with a number that was substantially lower, 20% lower. I was a seller. Like, I'm done. Like, I was done anyway because decimalization, paying for order flow, and multi-listing. But now I'm done because, 10 people that I knew from the Amex who were up on windows in the world were eviscerated. Everyone was inundated with this toxic waste as they were sent out. I happened to be lucky and get all my people off the island. And I got the last ferry across the Hudson to Hoboken, and I was halfway across when the tower fell. So I sold the company and was happy to exit the company. I didn't want to be a specialist anymore. And then I started looking for what's sort of next, but I had a lot of time to close down positions and coach all 3 of my children in every rec sport imaginable here in a small town here in New Jersey, not far from New York. So I had that opportunity to be around them, coach them, give them the number they wanted we did baseball, roller hockey, volleyball, soccer. I don't know, it's a bunch of stuff. It was just great. We won the championship in baseball. We won the championship in roller hockey. We got our ass kicked in wrestling. It was good stuff. And then I started sort of trying to figure out what to do. One of the things that I had a real problem with was running into people who I thought were legitimate business people. In reality, were not. So when you're on the American stock exchange floor, any stock exchange floor, you have this legitimacy. You have this badge on, so the clearing agent's going to clear your trades. And no matter what you thought of someone, and we had doctors, lawyers, backgammon players, bridge players, lots of people. It's very similar, that kind of stuff. But the trade cleared, and maybe you thought the person was not the greatest person, or you didn't like them, or there's people in the crowd that nobody liked or something, but their check cleared, right? Like so the legitimate people, legitimate business people. Maybe you didn't like the guy's personality, or maybe he's just a snipe in the crowd, or maybe when everybody pitched in for something, he didn't care or something like that. Because it's when you spend that much time with people, you get to know them better than your spouse.
Yeah.
Definitely better than their spouse.
Yeah.
And you know that family stuff. So trying to find and whatever business you're going to go into and find legitimate people, even then, and now with social media and stuff, who knows how they can fake things, but like it was just a different world out there as I was trying to figure out what was next.
So what do you think is the profile of a legitimate business person? Somebody who's, in your opinion, that now that you've seen so many startup ventures come and go, and you've spent all this time just understanding people, what do you think makes a good entrepreneur?
Tenacity, willing to work 6 or 7 days a week, willing to always answer and respond immediately to issues, not needing, I don't know, like some people just, maybe it can be an A personality, but it doesn't have to be. It's sort of, it depends, right? Like I have a better idea. I've hired and fired a lot of people and traders and stuff, and you sort of get a better idea of them as you go about time. But you can sort of, now that LinkedIn is really popular, you can get a better idea of their business background, right? You can see everything that's there. They graduated school. If you really want, you can call the school, you can call the places, you can call people, you see who you know. You can ask about them, like, hey, do you know Kimberly? What's her story? Like, is she who she says she is? She's telling me this and that. And so it's sort of easier. But other than that, like some people are really good at sort of pretending. Like, you see the movies where people pretend they're lots of different things and they're good at it. So I should have probably stayed as a market maker, or like an upstairs market making firm. 9/11 sort of messed me up, and I was just, I took my ball and went home. Like, all right, I'm just
Maybe
going
time.
home, spend time with my family, and whatever. And there's a lot of opportunity. I understand. I was just speaking. I've been in New York City last week for tech conference the whole week, and then another event. And I ran into one of the traders on the floor I knew, and he was telling me that the crypto option pits, where they're trading options on Bitcoin and Ethereum, are like the 1980s of options. And it made
Really?
me start to salivate thinking, I think I want to go back and start market making a crypto. If the market's that wide and the customers are coming in to sell on the bid and buy in the offer, like, I could go hedge with crypto and I could go do this stuff. So I'm not sure the answer, like it's a gut thing or something, but I just joined a group on LinkedIn. I was unaware of it. It's called PEF. It's previously exited founders, and they do sort of a background check on you to see that you exited. So you can sort of know that they really exited. Like someone on LinkedIn can say, I went to Harvard, I have a 4-year degree, and like unless you're calling, you don't know.
Yeah.
So I joined that group and I've been connecting with them. They did an event recently in New York City about biohacking, what's real and what's BS. And I got to meet them in person, meet lots of people who've had multiple exits. They're in the group. Like I'm like 99% sure they're all legit. And they've exited and they know what it's like. What makes a good entrepreneur? I don't know. I think just tenacity, like just the willing to never say no and just keep grinding on something. There's no problem that can't be fixed or overcome. So
Let's transition to a couple of things. I know you're on a lot of advisory boards for tech startups. What is emerging? What's trending in startups right now that you're seeing in the technology space?
come on, we know that answer, right? AI. AI is just everywhere. I'm using it. I use ChatGPT for free. I don't even pay for it. It does some great things for me. Like I'll write an email and I'll throw it in there and it'll make me look like an English major. It'll fancy it up. I'm using it for lots of different things. I'm using other agents, like I'm using something for LinkedIn, and then I have and maybe there's not a lot of AI in it. Maybe there's a Calendly, which allows me to have people book in and out. I could just send them a link, and I don't have to keep sending emails back and forth when I'm available or not, and they can cancel and stuff. So I'm going to say AI agents, like they're spinning them up almost overnight. So I think that we are probably less than 18 months away from a company that's valued at $1 billion, a unicorn, and finding out that it's one person. that did the whole thing. And they have multiple AI agents that are coding and doing whatever they do. There's just so many of them now. It's insane to me. I think we're less than 5 years away from having to go to the store instead of buying a car. You're going to go buy a robot, like an android kind of robot that will, physical, like looking like a human, clean bedpans, do things like that. It's pretty obvious. I was just at another conference for robotics. They have, and these are not looking like androids, but they're robots that can unload a tractor trailer and pick up a 70-pound box by suction and load it on the thing. There's one that they were using for airlines. So there was another company there that was, instead of using hydraulics that have hydraulic fluid in it, they're using electricity. So there's no fluid loss, there's no environmental problem, and it also knows when there's maintenance, so it lets you know. So those tractors and stuff like that are all going to go electric the way it looks like to me. And I think I just saw the first electric airplane take a flight and land. So, with AI, I just think we're not, we're ready for it. The world is going to change dramatically. And in the back of your mind, I'm a big Arnold Terminator kind of fan. Do we have something to worry about there? I don't know, maybe. I have no idea. But the cat's out of the bag, or the barn door is
Yeah.
open, and people are
Pandora's box.
people are moving at warp speed. So almost every day or two, you hear some kind of announcement about what something's doing. I think Hollywood going to have some issues. Like, people are making little featured films already, only with AI and stuff like that. So we'll see.
What advice do you have to someone, to particularly a business that is not applying AI or is hesitant to integrate that into their business today?
So there are a bunch of firms around that have raised money that are looking to buy all of boomers' businesses. And there's lots of people my age that run a business, that legitimate business, you may not even know about it, but they've made lots and lots of money. They've never automated or brought in these different systems. It didn't matter to them. They have 10 employees, 50 employees, all these people looking to buy these businesses, bring in all the automation, bring in all the software, bring in everything, and take the next leg up with these things. If you're a business and your competition is putting AI or using AI in various different ways, you're going to be leapfrogged, and they're quickly going to. I was at a board event at the NASDAQ. They host this. I think it was the Pepsi board lady on one of their boards said that 80% of their customer service calls are answered by AI, and the customer is happy, and the other 20% go to a human being because it's more sophisticated, but they have like the top 10,000 answers there. People like, how do I get in? How do I reset this? How do I do that? And I think there's AI is so sophisticated that people don't even realize they're speaking to, a computer. So the things that it could do, and that way you can automate things, and, it's just fantastic, like just lots of different things.
So finally, let's talk about Gilder. I want to make sure that we have plenty of time to cover that. It sounds like over the course of your career, not only have you been a mentor, but it probably had some mentorship somewhere along the way, it sounds like. So explain to me and to others about what the Gilder is and what it provides.
So I'll go back just a little bit. I was at an event in New Jersey, in Hoboken on Sinatra Drive, looking at Manhattan, called Propellify. Bunch of startups. I met my partner at Nuvation, our venture fund that invests in brain health startups, there, and I started mentoring him, created a nice relationship. We eventually formed Nuvation Ventures to invest in brain health startups. He at the time was working at New Chip, and Accelerate out of Austin, Texas, that has since disappeared for a couple of different reasons, but been around for years, and I started mentoring there. He said, you should come there. Like, he was running all the Series A. You should come mentor. So I mentored half a dozen different tech startups and really got, even more passion for more mentoring. But like, when you're a trader and you're hiring traders, you're also mentoring them, right? Like, you're talking about trades, you're sort of doing a post-mortem of how the day went, what you could have done better, understanding volatility and things. And then when the accelerator collapsed overnight and 100 people were out of a job, I had known Brian, who worked there, Brian Lee, my partner for Gilder, a co-founder, and Tyga, and we formed Gilder. I don't know, a couple of months later, we thought maybe we're going to do an accelerator. We didn't want to do that, so we decided to do a community. So Gilder is a knowledge community for founders. We provide access to mentors, events, and tools to help build a successful company. We believe we can empower anybody at any stage of the career. We bootstrapped it. We all put in $900 a piece and started building it out. We wanted to have a community where we have mentors to pair them with people building startups. First, probably 3 or 4 months, we just built the platform and the assets on it and onboarded mentors, telling them as soon as because we have customers or startups, we'll pair you with them. So there was a lot of onboarding of mentors in, every sort of area you could think of, SaaS and marketing and whatever there might be. So we have people from Meta and Google and multiple exits and all around the world. 20, I think about 25 countries. We have 270 people there, and we provide them with a mentor and with executive workshops and innovation roundtables and speed networking and one-on-one introductions and 100 other things. And we have 14 videos over 7 weeks you could take, and just lots of stuff. In fact, more recently, we just had on our podcast, and you can see that on YouTube, Alex Bean, he exited a company, Divvy, for 2.5 billion with a B. So you can go on to YouTube. He's probably 3 or 4 back and listen to him. We're on TikTok, of course, and we're on Instagram. So we got a great platform, and we have lots of startups there building anything and everything, all AI sort of in some component. Like, you can't get around it. And AI has been here for sort of a long time, but now it's just much more sophisticated. So it's going well at Gilder. We just recently started offering what we call community in a box. We're offering that to venture firms, to incubators and accelerators. So if you're a venture firm and you're investing in these startups, you're writing a check and you're sort of, maybe you're helping them, maybe you're getting on the phone once in a while saying what's going on, introducing them to other people. Unless you're a bigger, larger community like Y Combinator or some of the corporate venture arms, you don't have this whole ecosystem built in. And as a person building a company, to be in a community, to have access to mentors and tools and people that have been there, done that, and exited is so important. And you have a much higher probability of success if you're in a community like that, or if you have access to those things. So we started offering community in a box. We're just out there as a soft launch already, talking to some venture firms and people like that. And if you're a venture firm and all you have is money and you're going to write a check to someone, but the other firm is going to write a similar check at a similar valuation, but they're offering this whole community for you to be in, it's a huge win for them, or whoever offers the community, or whoever has the mentors and all the, the whole platform to help. So that's our next foray in that.
Tell me a little bit about the pricing and packages, because when I learned this, I was stunned. So please share that information with others.
Yeah, so we are not we're not going to become a unicorn. We are open entree, is that it? Open entree to our community is $59 a month. If you bought a year, you get 2 months free. It's kind of dirt cheap. You get access. The platform itself has all the assets, but we have a Slack that has multiple channels. We do pitch deck review. We post lots of things there, and we're very aware of what your business is and how to make introductions to other people in the community and what's going on around the world. If you want a mentor, and the only step up is from gold to platinum, you'll get a mentor, and we do something what we call Progress Pulse and a bunch of other things. But Progress Pulse, where are you now, and where do you want to be in 6 months? And then we meet with you every month and say, maybe you wanted to get a certain amount of revenue, certain amount of customers, certain amount of signups. And if you're not there, we talk about it, how we can get there or help you pivot and talk about that. So we sort of try and hold your hand. So not just throw you on the platform, then see you next year on renewal time or something, even though there's so many events that you should be going to. But if you are building something and you think by keeping your nose down and just grinding and building, that's a good thing, it's not, because you have to come up and hear what everybody else is doing and what's going on and get help. And, it's amazing what you can learn by talking to other people that have exited and things like that. So the community is going well. At $59 a month, we're not going to become a unicorn. In fact, we still, even though we're bootstrapped, we still don't pay for HubSpot. We use it free. We still don't pay for Monday. We use it free. We certainly don't pay for Slack to archive the stuff at $6 a person times 270 people, because I don't need the archive. We figured out how to archive it itself, but it still does what we want. So we are doing what we preach, which is playing close to the vest. Don't burn through things. I see people do these huge raises and they just up the ante, and maybe they do, back a couple of years ago, they raised that what they thought was a astronomical price, and they shot themselves in the foot, because the next raise is going to be a down round and nobody wants a down round. And then They start spending too much money in fancy offices and things like that. I don't believe in all that. Just grind and do the right thing.
Michael, I want to acknowledge you for all the work that you've done and the way that you personally poured back into me. So, fun fact, everyone, this is our second time recording. So, Michael is legit when he says he's going to do something, he does it. And I just really appreciate and value the work that you're doing. Where can we find Gilder if anyone is looking for mentorship or just help with the next step?
So gildre.com. We are on the internet. We are on, I would just take some of our assets for free. Go to YouTube. And if you go there, please follow us. Go to TikTok, go to Instagram, see our content. We interview as part of a process of our people, the most interesting people on our platform or companies. We sort of do shorts and longs and do interviews and try and let people hear, like listen to Mr. Bean talk about exiting Divi for 2.5 billion. What he did, it's amazing. He built software for salespeople to turn in their expense reports because the chief financial officers would wait for these people, but they take months to do it. And he gave the software away in the beginning for free, but started monetizing by taking over their corporate credit cards to get the 2 or 3% that way. He was eventually bought by Bill.com. Go back and find one of our original ones from Fritz Lammen, the CEO of ClassPass and MindBody, 60,000 locations around the world. Listen to these people because they've been through it. They've exited. They understand what it's like. Not easy. Like even at a unicorn, none of this stuff is easy, right? Like, it's all about the customers. And you've seen how some of the sports teams have shot themselves in the foot, and like people are turned off like by the NBA now for all the craziness there and like different stuff. So it's all about building a business and then making sure that you are putting the correct foot forward to the world. Because social media, like you do the wrong thing or you have a piece of software that messes up and the customers get upset, you're done. Like if your platform is down, like you should know, you should have systems that are there that your platform is up, that your CSAT scores for customers are high and that you're doing the right thing. It's a full-time process, obviously.
Well, thank you again. Want to be very mindful of your time. I appreciate you being here, Michael.
Thank you. It's a pleasure. And I'll see you on the other side.
Bye.